Okay, so we will continue. WLY being the biggest customer in terms of volume has demanded bar consumed maximum activity cost drivers in the case of which all are the cases where WLY has taken the maximum volume. If you see, order taking and processing. In case of A, order taking and processing, then B, which is one expedited or rush orders. Rush orders, emergency orders. Then what do they say? Delivery cost is nil because it is on FOB at shipment. FOB at the shipment point. Now next is sales return processing. Okay. Then next, billing cost, customer visit. Customer visit. Then next, even for inventory carrying cost. So in all these cases, the maximum consumption of cost drivers has been done by whom? WLY. Due to which what happened? Its profitability came down even further. Due to the high consumption cost drivers has resulted in the fall of profitability even further. Okay, so these are the two reasons, two things which needs to be focused. The first aspect is you need to focus more on MGH, which is the highest profit contributing customer. So you need to give more discounts to MGH and you need to spend more resources on MGH so that the sales volume can be increased. Once the sale volume is increased in case of MGH, naturally the profit of the entity as well as the profit of MGH will go up. Okay. On the other hand, WLY, though it is the highest volume contributing customer right now, you have to be very cautious with respect to WLY because that is the least profitable customer. So you can see on one side it is the least profitable customer, and the other side it is the customer which consumes the maximum cost drivers quantities. Okay, so a balance should be there between the consumption of this one and the profitability. Okay, so the entity should try to bring out a proper balance between the volume, between the quantity of CDs consumed, cost drivers consumed, and the profitability. The customer which contributes maximum profit can consume maximum cost drivers. That is permitted. But the customer which contributes the least profit should not be the one who consume the maximum cost drivers. So that has to be changed. Okay, so these are the points. You can think of some other points also. So these are the major points which you need to keep in mind. Okay, right. Now I think we need to move to the next problem. Next is one more question is there. Question number 5, the last question. You can read the question. Golden East Limited. Okay, we will read the question. Golden East Limited is a hop manufacturing company doing business through wholesalers and retailers. So here the name of the company is, what is the name of the company? Golden East Limited. Okay, East Limited is a hop manufacturing company, and this company is doing its business through wholesalers, okay, and retailers. Now the company is following activity based costing system. The average cost per hop is rupees 600 and the listed price is 1000 rupees. So average cost, list selling price per unit is rupees 1000, and variable cost or average cost per hop is rupees 600. Okay, and there is a discount policy. The hops are offered a discount of 25% on list price for orders above 200 units. If order is above 200 units. Okay, and the discount is limited to 20%. 20% if the order is 200 units or less. 200 units or less. The company wants to analyze the profitability of its two wholesale customers A and B and two retail customers X and Y on the basis of business with them during the last year. This is to explore opportunities to increase the profitability from the customers. The relevant data pertaining to the last year were given below. Purchase orders is given. The number of hops purchased per order is given. Number of visits to the customer place is available. Number of ordinary deliveries. Then okay, again there was some issue with the broadband. Okay, right. Okay. Now the number of visits to the customer's place that is given, number of ordinary deliveries and number of speed deliveries. Okay, the activity cost driver and the rate are as under. You have the cost driver and the cost per unit of driver is also available for each of the activity. What is the requirement? The requirement is evaluate the customer profitability by calculating the profit per hop from each customer. Then second one, recommend steps to be taken to improve profitability from less profitable customers. Then third one, list down the service organizations for which the customer profitability analysis is useful. Then last one, explain specific benefits of customer profitability analysis. So the basically third sub question and fourth sub question, these are theory questions, where first you will have to write the service organization for which the customer profitability analysis would be helpful. You can write the case of banks, then these insurance companies, then you can even write the cases of supermarkets, okay, and any service organizations. The customer profitability will be very much useful. Then you can write the specific benefits of customer profitability. This will help you to identify which customer is more profitable in terms of the profit contribution, and it will help the organization to shift its focus from volume to the profit, okay, and also the focus can be shifted from less profitable customers to more profitable customers. So those theories you can list down in case of the sub question 3 and sub question 4. Now we will do sub question 1 and we will see how sub question 2 can be answered. Okay, so sub question 1, evaluate the customer profitability by calculating profit per hop from each customer. Okay, again the same manner as we did for the previous problem. First we have to see what is the discount eligibility. So we will start with sales revenue. Okay, so working note number 1, analysis of customer wise sales revenue. Okay, we have how many customers? 4 customers, A, B, X, Y. So A, B, X, Y, then you have the total value. Okay, you start with okay, first we have to find out number of units sold. Is it directly given? It is not directly given, you will have to compute it. They say that number of purchase orders 50, 65, 230, 270. Then number of hops purchased per order, that is also available. So what you can do, if you multiply the number of purchase orders with the number of hops per purchase order, you will get the total number of hops sold in the year, right? So do that first. Number of purchase orders, number of purchase orders, first one is 50, then 65, then you have 230, then 270. Okay, then number of hops per PO or purchase order, first case it is 500, then 300, then 40 and 30. Therefore number of units of hops sold in the year, okay, 50 into 500 will be 25,000, then 65 into 300 will be 19,500, then 230 into 40 will give you 9,200, and then 270 into 30 will give you 8,100. Okay, total will be 25,000 plus 19,500 plus 9,200 plus 8,100, 61,800. Okay, then listed selling price per unit. What was the listed selling price? 1000, 1000, 1000 and 1000. There is a discount policy. Discount policy, they say if the order is above 200, then 25%, else it is 20%. So discount percentage eligible or available. Here it is above 200, so 25%, because 500 units, okay, so 25%. Here 300, so here also 25. Here only 40, so 20%, and here 30, 20%. Therefore, net selling price, net selling price, that is after discount, how much? 1000 into 75%, that is rupees 750. This is also 1000 into 75, rupees 750. This is 1000 into 80%, that is rupees 800. Then 1000 into 80%, that is 1000, that is 800. Okay, now net selling price, net sales revenue. Net sales revenue. Net sales revenue. How do you compute net sales revenue? 25,000 into 750 will give you 1 crore 87 lakh 50,000. Then 19,500 into 750 will give you 146 25,000. Okay, next is 9,200 into 800 will give you 736. 73 lakh 60,000. Then 8,100 into 800, 64 lakh 80,000. 64 lakh 80,000. And total revenue will be 187 500 plus 146, then 73, then 64. It is rupees 472 15,000. Okay, so this is what you have as sales revenue. Now what else? Okay, you will have to see how this allocation has to be done with respect to the overheads, right? Okay, so that has to be done. Working note number 2, allocation of overheads. Allocation of overheads. Okay, you can take A, B, X, Y, then total. Let's take one by one. The first one is order processing. Order processing. What is the rate? They say 1,300 per order. 1,300 per order. And here the value is number of purchase order 50, 65, 50, 65, 230 is 270. 50, 65, 230, 270. 3,51,000, and total will be 65,000 plus 54, 2,99,000 plus 351, 799,500, 791, 799,500, 99,500. Then customer visit cost, that is the next one. What is the customer visit cost? Customer visit cost, they say 7,400 per visit. And how many visits? 10, 15, 25, 22. 10, 15, 25, 22. $74,000 and 15 into 7,400, that will come to 1,11,000. Then 25 into 7,400 will be 1,85,000. 22 into 7,400 will be 162,800. Total will be 74,000 plus 1,10,000 plus 185,000 plus 162,800. 532,800 total. 532,800. Then ordinary delivery cost. Next is ordinary delivery cost at rupees 200 per delivery, 2,000 per delivery. $45.50, 45.50, 175, 200. This is 90,000. This is 1 lakh. Then this is 3,50,000. And this is 4 lakh. And total will be 9,40,000. 9,40,000. Then what? Next is speed delivery cost. Speed delivery cost, how much? Rupees 6,000 per delivery. Emergency. What is the cost? What is the quantity of CDs? 5, 15, 50, 65. 5, 15, 5, 15, 50, 65. This is 30,000. This is 90,000. This is 3 lakh. And here it is 3,90,000. Okay, so total 8,10,000. Okay, so that is how we are allocating the overheads. Now you will have to prepare the what customer profitability analysis statement of customer profitability. Total. First is net sales proceeds. We have already computed 1,87,50,000 for A, and here 146,25,000 for B, then 73,60,000 for X, and 64,80,000 for Y, and total for 72,15,000 less cost of goods sold. How you find out the cost of goods sold? Cost of goods sold, they have given the information. Okay, rupees 600 per hop. So into total numbers sold into 600. Okay, so okay, number sold will be 25,000 into 600. So it will be 150. 150. Next, 19,500. 500 into 600. 19,500 into 600. 9,200 into 600. Then 8,100 into 600. Here it is 25,000. 600. So this is 117 lakhs. The next one is 55 lakh 20,000. The next is 48 lakh 60,000. And total will be 370 80,000. Okay, 370 80,000. So these two will give you the gross margin. So 187.50 minus 1,450 lakhs will be 37 lakh 50,000. Then 146.25 minus 117 will be 29 lakh 25,000. Then 73 lakh 60,000 minus 55 lakh 20,000. That is 18 lakh 40,000. 64 lakh 80,000 minus 48 lakh 60,000. That is 16 lakh 20,000. 37.50 plus 29.25 plus 18 lakh 40,000 plus 16 lakh 20,000. That is 101.35. 101.35,000. Okay. Now what do you have to do? You have to less the overheads allocated. If you want these overheads, you can classify into various category: distribution, then volume related, or others, or you can say warehousing, then retail cost, then you can write the distribution cost, then others. So in any manner you can present it, that is left to you. Okay, first one is order processing cost. So right now what I am doing is I am writing in the same order. Okay, so order processing cost for 65,000, then 84,500, then 2,99,000, then 3,51,000, and total will be 7,99,500. Okay, next is visiting customer visit cost. Customer visit cost 74,000, then 1,11,000, one lakh 11,000, 1,85,000, 1,85,000. Then comes 162 800. Total will be 532 800. Then next is ordinary delivery. Okay, ordinary delivery and speed delivery. Ordinary delivery cost 90,000, 1 lakh, 3,50,000, then 4 lakh, then 9,40,000 total. Then speed delivery. Speed delivery cost will be 30,000, then 90,000, then 3 lakh. This is 3,90,000 and 8,10,000. Okay, then comes total overheads. $65,000 plus, 74,000 plus, 90,000 plus, 30,000, 259, 2,59,000. Okay, 2,59,000. Next is 84,500 plus 111,000, then 100,000, 90,000. That is 3,84,500. Next is 299,000, 185,000, then 350,000, 300,000, 3 lakhs. That comes to 11 lakh 34,000. 351 plus 162 800 plus 4 lakhs plus 3 lakh 90. That will give you 13 lakh 03 800. So 2,59,000 plus 384,500 plus 11,34,000 plus 13,03,800. Total will be 30,81,300. 30,81,300. Okay, so you reduce, you will get the net profit. Net profit from the customer. Net profit from the customer. Okay, customer is 37,50,000 minus 2,59,000. 34 lakh 91,000. Next is 29 lakh 25,000 minus 3 lakh 84 500. 3 lakh 84 500, that is 25 lakh 40,500. Okay, once again, if you see 54,500 plus 54,500 plus this is 385,500 total. 84,500 plus that's 385,500. So here it will be 29 lakh 25,000. 29 lakh 25,000 minus 385,500 will give you 25,39,500. 25,39,500. Then 18 lakh 40,000 minus 11 lakh 34,000 will give you 7 lakh 06,000. 7 lakh 6,000. 1620 minus 1303 800 will give you 316,200. 316,200. So total will be 34 lakh 91,000 plus 25 lakh 39,500 plus 706,000 plus 316,200. Total will be 17 lakh 52,700. Okay, so that is the total. Now what do you have to do? Profit per hob. Hob sold. What is the number of hobs sold here? We have already computed. 25,000, 19,500. 25,000, 19,500. Then 9,200, 8,100. Okay, so this is equal to 3491 divided by 25,000. 139.64 per unit. Then 25 lakh 39,500 divided by 19,500 will be 130.23 per unit. Then 7 lakh 6,000 divided by 9,200. This is 76.74 per unit. And here 3 lakh 16,200 divided by 8,900. This is 39.04. Okay, 39.04. And net 70 lakh 52,700 divided by what is the total number of units sold? 25,000 plus 19,500 plus 9,200 plus 8,100, 61,800. No, so 70 lakh 52,700 divided by 61,800 will be 114.12 per hob or per unit. Okay, so what is the conclusions you can make from this evaluation? Okay, what are the evaluations you can make? What is the question? The question is evaluate the customer profitability, calculating the profit per hop from each customer. Recommend steps to be taken to improve profitability from less profitable customers. Okay, evaluation. Which is the highest profitable customer is who? A. Then lowest profitable customer is who? In terms of profit, lowest is this Y. Okay, then we will do one thing. We will write a table like we did in the previous question. Then that will help. That will be helpful for us to answer the next sub question, next sub question also. Okay, so analysis of profitability. A, B, X, Y total percentage of sales volume. Okay, 25,000 out of 61,800. What is the percentage? 40.45 percentage. Next is 9,000. Yeah, 19,500 divided by 61,800. This is 31.55. Then X 9,200 divided by 61,800. 14.88. Then next is 8,100 divided by 61,800. 13.10. This is the percentage of sales volume. Now what else you can write? Percentage of sales revenue. You can write net sales revenue. That also you can compute, no? Percentage of sales revenue. Okay, how do you compute? First one is 1 crore 87 lakh 50,000 divided by 472.15, and the percentage is 39.71 percentage. Okay, next is 146.25 out of 472.15 percentage, 30.97 percentage. Next is 73 lakh 60,000 out of 472.15 percentage, 15.58 percentage. Next is 64 lakhs 80,000 divided by 472.15, 13.72 percentage. That is percentage of sales revenue. More or less, this difference between these two, the percentage of sales volume and percentage of sales revenue, is purely on account of the difference in the discount. Okay, A and B is eligible for a higher discount of 25%, whereas X and Y is eligible only for 20%. So net sale proceeds from X and Y will be little high in terms of percentage compared to A and B. Okay, now percentage of profit. Okay, percentage of profit. Percentage of profit. How do you find percentage of profit? You know what is the total profit. Okay, total profit is 70 lakh 52,700. So 34 lakh 91,000 divided by 70 lakh 52,000 gives you 49.5. Okay, next is how much? What is the total profit? 25 lakh 39,000, 25 39 500 on 70 lakh 52 700. That will be 36%. And the next one is 7 lakh 6,000 on 70 lakh 52 700, 10%. Next is 316 200 on 70 52 700. It's just 4.48 or 4.50. Okay, percentage of profit. Now one more information you have. Now profit per unit sold also you will write. Okay, 139.64, then 130.23, then 76.74, 39.04. Okay, you need one more information. You know what is the total overheads? Okay, what is the total overheads spent for each customer? Okay, 2,59,000, 2,59,000, then 3,85,500, 3,85,500. Okay, then you have 11,34,000, 11,34,000, then 13,03,800, 13,03,800. What is the total? 30,81,300, 30,81,300. Okay, we will just compute the percentage of OH spent to total OH and also the overhead per unit of product sold. 259 divided by 30,81,300. This is just 8.4%. Then 385,500 divided by 30,81,300. This is 12.5%. 11,34,000 on 30,81,300. This is 36.80%. And next is 13,03,800 divided by 30,81,300. How much is 42%? Then overhead, this is in rupees. Overhead rupees per unit sold. Okay, 259 divided by what is the number of units sold? 25,000. 25,000. 10.36. Okay, next is 385,500 divided by what is the number of units sold? 19,500. So that will be 19.76. 19.76 rupees. Next is 11,34,000. 11,34,000 divided by what is the number of units? 9,200. That is 123.26 per unit. Then 13,03,800 divided by 8,100. What is it? 160. 160.96. Now you would have, I mean, the reason for lower profitability for X and Y would be more clear. Okay, why the profit of X and Y is lower than that of A and B? It's very clear. It is on account of the higher overhead cost that is allocated to each of this X and Y, or higher overhead cost drivers consumed by them. Okay, now there is one difference between this particular problem and the previous problems. In the previous problems, when we wrote the recommendation, we saw that in the cases of customers who are contributing maximum volume, they are given higher discount, and Due to that higher discount and higher consumption of cost drivers, those high volume customers are turning out to be the least profitable customers. There is an irony. The customers who are given the highest, who contribute the highest volume, they turn out to be the least profitable customers. That was the case in the previous two problems. And we saw that that needs to be corrected by adopting a correct discount policy and overhead contribution policies. That is what we got in the previous questions. But when we come to this particular problem, here the maximum volume is contributed by the wholesalers, that is A and B, obviously. Okay, any wholesale client will be the maximum volume based customers. But if you see the profitability, now in terms of sales volume, 40% is by A and B is contributing how much? 31%. 40 and 31. So total it will come to almost 72% of the total volume is contributed by A and B. But while you come to the profit, 49 plus 36, that is close to 86 to 87% of the total profit is contributed by A and B. So here the highest volume is also by A and B, and highest profit is also by A and B. But while you come to X and Y, they are the retailers. So naturally what will happen with retailers, the volume what they buy will be very less compared to the wholesalers. Okay, but and discount eligible to them also will be less. Here we have given only 20% discount, whereas wholesalers were given higher discount. But here the problem is the consumption of cost drivers is very huge in case of X and Y, due to which the profits per unit or profit percentage has slashed drastically. Even though they are contributing, they together contribute 14 plus 13, that is 27% of total volume. In terms of profit, they are only contributing 10 plus 4.50, say less than 15%, which is due to the high overhead cost per unit. Okay, and with respect to the overhead consumption, both A and B, which contributes or constitutes around 72% of total volume, they have the overhead per unit of 10.36 and 19.76 respectively. Whereas in case of X and Y, where they contribute only 14% of total profits and 27% of the 28 or 27% of total sales, the overhead cost per unit is 123 and 160 respectively, which cannot be accepted. That needs to be corrected. Okay, then only you can improve the profitability. Okay, so you can make an analysis A and B, comma, A and B, comma, the wholesale customers together contribute around 72% of total sales volume, around 72% of total sales volume, and 87% of total profits. 87% of total profits. Okay, 87% of total profits. These two customers are the highest profitable customers, and therefore should be given greater importance and focus. Next paragraph. On the other hand, X and Y, comma, the retail customers contributes only 27% of, or 28% of, contributes only 28% of total sales volume, and less than 15% of total profits. A and X and Y are the least profitable customers. least profitable customers. Okay, so that is the evaluation of the customer profitability. Now what you have to do, you have to recommend steps to be taken to improve profitability from less profitable customers. Okay, so you can write the heading steps for improving profitability. Steps for improving profitability. Steps for improving profitability. Okay, you can write X and Y. X and Y constitutes the least profitable customers of the company. Least profitable customers of the company. Okay, it is because of two major reasons. Okay, number one, two major reasons. Number one, low volume of sales. Low volume of sales as compared to the wholesale customers. When the volume is less, what will happen? The profit as proportion of total profit will be less. Okay, so you can write under that, due to the low volume, the proportion of the profits contributed by them, the proportion of the profits contributed by them to the total profits are also low. That is one obvious reason. When the volumes are less, what will happen? Total profit will be less. Okay, so when you take a proportion to the total profits of the entity, that proportion will be obviously lower than that of the wholesalers. Okay, now two, huge overhead cost. Under that you can write X and Y consumes huge quantities of cost drivers, which results in very high overhead cost allocation. Okay, the overhead per unit sold, allocated to X and Y are rupees 123.26 per unit, per unit, and 160.96 per unit respectively, comma, as compared to 10.36 rupees 10.36 per unit, per unit, and rupees 19.76 per unit, as compared to rupees 10.36 per unit and rupees 19.76 per unit in case of A and B. Okay, this has resulted in erosion of the profit per unit sold. Especially in customer Y. Of course, in both the cases it is same, but profit per unit in case of X is 76, whereas in case of Y it is 39, almost half of the profits of 76, when the volume contributed by both of them are more or less equal. Okay, now next paragraph you can write the profitability of X and Y can be improved. profitability of X and Y can be improved only by, only by, how you can improve? Only by reducing the overhead consumption, the overhead consumption. In bracket you can write cost driver consumption, overhead consumption, in bracket cost driver consumption, bracket cost of of these customers, okay. Now where all you can reduce this, that is what we have to see. Okay, if you see the consumption, the purchase orders in the case of A and B it is only 50 and 65, whereas in case of X and Y it is 230 and 270. Okay, and the cost is 1300 per order. So if it is applied on 230 and 270, it is going to be huge cost. Number of hops purchased, that is okay, that is also less. Okay, now number of visits to customers place, in the case of A and B 10 and 15, whereas in case of X and Y it is 25 and 22. Why such big preference should be given to them? The number of ordinary deliveries, it is 175 and 200. Of course we can understand, because here the purchase orders is huge. But speed deliveries, where A and B has only 5 and 15, X and Y requires 50 and 65. Okay, so these things have to be curtailed. Okay, so you can write 1 under that, 1 recommendation 1. Okay, reduce the number of purchase orders, of X and Y, drastically, Okay, because now it is 230 plus 270 will be how much? 500, as against in case of A and B together is only 50 plus 65. Okay, 50 plus 65, 150. Okay, now what can you do here? Here the only thing is that you have to set some targets or limit for the purchase orders. Okay, the company may set some limits for reducing the purchase orders, okay, by increasing the number of hops purchased per order, that is one option. Okay, when they why the number of orders are very huge? Because the number of hops purchased per order is less. Okay, try to increase that. That is not actually practically possible, because in case of retailers they can only buy like that, they cannot make any bulk purchases. Okay, but still if we can improve the quantity purchased per order, then what will happen? The number of POs will come down, naturally the cost on that extent will come down. Okay, now to reduce the number of visits to the customer's place, in case of X and Y, reduce the number of visits to the customer's place, to the customer's premise or place of X and Y, Why it is to be done? See, there is a huge cost for making this visit. Now in case of X and Y, which contributes only say 20% or 25% of total volume, the number of visits is 25 and 22, that is 47. Whereas in the case of A and B, total it is only 25. Okay, so what you can write? Reduce the number of visits. Okay, the number of visits to X and Y, may be reduced drastically, as their contribution, in bracket, both in terms of sales volume and profits, bracket closed, are the least. Okay, next what you can do? Number of ordinary deliveries we cannot reduce, because if the number of purchase order is reduced, then automatically number of ordinary deliveries will also come down. You can mention that also. 3, the number of ordinary deliveries can be reduced. number of ordinary deliveries can be reduced by reducing the number of POs, purchase orders, by reducing the number of purchase orders. Okay, that is only an observation. Now, next point. In the case of X and Y, what is the number of speed deliveries? 50 plus 65, that is 115. Whereas in case of A and B, it is only 20. Okay, so what we are saying is that the facility of speed delivery should be eliminated in the case of X and Y. Why? Because they are contributing only this much. And in the case of the speed deliveries, the cost is thrice the cost of normal delivery. So you can write in case of speed delivery, the cost is 3 times the cost of normal delivery. 3 times the cost of normal delivery. 3 times the cost of normal delivery. Therefore, this facility of speed delivery, should be stopped for X and Y. Okay, will anything happen? No, it may not. It will not make any impact because their contribution is only, in terms of profitability, it is only 15%. So even if they reduce, then what will happen? Even if they reduce the sales volume, it is not going to affect your profit much. Okay, so you can write else any provisional speed delivery should be done only after charging additional price. So either you stop that facility for X and Y, or what you can do, you tell them, if you want speed delivery, we will charge you extra. Okay, these are the only 2 options. So ultimately, what are our recommendations? Our recommendation is, in case of the activities contributing to the overhead cost, it should be curtailed, it should be reduced drastically, so that the total overhead cost of X and Y will come down. Okay, that is the major suggestions that can be given in the question. Okay, on the answer. Now, if you see, list down the service organization for which the customer profitability analysis is useful. You can write down. I will give the answer also. Okay, service organizations for which CPA is useful. Service organizations for which CPA is useful. A. Financial institutions. In bracket you can write banks, insurance companies, etc. Then B. Hospitality sector. Hospitality sector. In bracket you can write hotels, travel agents, etc. Then logistics and freight companies. Logistics and freight companies means those who provide warehousing as well as transportation facilities. Next, hospitals. Okay, hospitals. Next, professional services. In bracket you can write audit, law, then consultancy, etc. In all these cases, this will be beneficial. Okay, now what are the specific benefits of customer profit analysis? I told you it will help you to identify the customers who are eroding your profitability, and those customers who are contributing to the profitability. So this will help you to prepare a better manner of focus on high profitable customers, and you can drop the low profitable customers also. So these are the major benefits of customer profitability analysis. Okay, now we will do one thing. I think this chapter is over. Now before we move to the next chapter, we will take some 15 minutes break. Okay.